need to understand what the market is doing and what the market is giving you. That's the most important things that you need to understand. So in this case, we're going to start with our, actually you're supposed to start with gold. I'm going to show you what gold was doing. Okay. So we're going to start with gold. I don't know why my network is a bit slow, but yeah. Okay, this is the gold. All right, so this is the gold chart. Okay, so if you still remember, I say to you, we will break out your sell, and then this was the target. So as you can see, we are actually almost like, let me check the pips, the percentage. We are right now, and this pay actually moved like over 80% of our target. So the structure, if you still remember the structure, it was, let me go to 1 month. So you need to understand the structure first before you go, before you trade anything. So this is the whole structure that I'm following, and the market has been following my pattern. The market has been following my pattern, as you can see. This is what I've been expecting, and this is what the market has been doing. So we are within the structure. We're within the structure. So yeah, before we do that, the most important thing that as a trader you need to understand is to know the direction of the market. So how do you know the direction of the market? There is audio. I think it's just that you're not hearing me, but there is audio. Okay. Okay, so then we look at the dollar index, and the dollar index mostly, if you are a US dollar trader, you have to understand the dollar index first. This is where now you get the direction of what is happening in a nutshell. But before we do that, like I said, I want you guys to understand the correlation between pairs, the relationship between pairs. So the relationship between pairs, number one, if you are a gold trader, mostly if you're a gold trader, you have to understand that gold, it does have a relationship with USD yen. So what do I mean by USD yen? So in this case, when we purchase gold, we sell USD yen, meaning to say price of, okay, there's someone in the background, it's not making noise there. Okay, so when you buy gold, we sell USD yen. So what does it mean? It means that when price of gold goes up, price of yen also goes up. When price of yen goes down, meaning to say when you buy USD yen, you sell gold. So in that, we also realize that with gold, mostly if you're a USD trader, you must understand also there's a relationship between gold and USD. Why? Because mostly if we're looking here in Africa, our main instrument which is in the market is ZAR, so which is USD ZAR. So ZAR, what do we do in ZAR? We mine gold and then we export gold, right? Okay, so as we export gold, it means that for the economy or for the currency to go stronger, it's whereby the price of gold also goes up. So when the price of gold goes up, they make more sales and they get better exchange rate. So in this case now graphically, it means that when we buy gold, we sell USD ZAR, meaning to say we sell. In selling USD ZAR, we are saying that the South African rand is more stronger than what? It's stronger than the American dollar. So that's what it means. Okay, so here's this scenario. I remember last time I said to you guys that, okay, when the market, during CPI, we spoke about this. I'm going to go back and refer to it. We say that we were expecting the market to shoot up and fill the gap. So by that time, it was the gap. Yeah. Expecting the market to fill the gap, and then they go down. So what did they do? This was CPI. They failed to fill the gap. So as you can see, the gap was not filled here. There was no need for you to buy or sell because there's no confirmation. Okay. Then what they did the following day they came and spiked way up and then they filled the gap. So what are we waiting for now? We are waiting, okay, since this is a game of probability, now we are waiting for the market to retrace. So what are we going to do now? Everything is still okay. I'm just going to run through the dollar index from the weekly, what we spoke about the other time. So if you still remember, we realized that, okay, now there's a WXY which has been formed after wave one. So market still have to correct for this level, right? So here now, that's where we need to correct now because we expected the market to hold this level. But what is it giving us? So let's zoom in and check. This is a new update now. So this market, it came, okay, this is the level. That's where exactly they are right now. So in this case, what are we saying? We are saying that if price closes below this area, we are what? That's when we are considering what? We sell. Why are we selling in this case? We are selling for a correction of 1, 2, 3. Understand? So in this case, we are expecting something like this, which is A equals to C, something like that. So as you can see now, this is more of 71.8%, 78.6%, sorry. Let me do this. So if you want the basics, you can go to my YouTube. You'll get the basics of this strategy. Okay, so this is more than to come in the 81.6, but we're expecting mostly price to come in this area. That's our main target. But when are we gonna sell? That can be someone's question. When are we gonna sell? Okay, so let's go to daily. So on daily time frame, we saw that, okay, remember before we had another line, another trend line. And also, how do you draw trend line? You join the first 2 points, like these 2 points, that's the first 2 points, right? That's how you draw your trend line. So now, I remember these people, they know, okay, like, okay, we know this strategy. So we're just gonna take this part. Yeah, just gonna take this high. So they know that we know this strategy. The A equals to C, I mean the break line, the trend and break line, the breakout, what. So what did they do? They came here and then started correcting. So in that, most of us, we sold here, thinking that they're gonna go down. Then they spiked up, they came back down again, they spiked up. But in doing that, they are also telling us something like, okay, they are validating this point of A. Understand? So what does it mean now? It's no longer an A, B, C, D, E. This has been invalidated. But what is it now? Now it's going to be something like this. Let me show you. All right. So this is our X, and then this is gonna be our A or our W, and then it's gonna be our X, and then we'll get our Y down there, which comes in this area. This is what we're gonna get. By getting that, we're getting a what? A WXY, which is a zigzag. So remember also now the properties of a zigzag, right? So, but what do we have for us to get this W? We have A, this is your A, right? And you have your P, then you've got your C. So, for this time when I was saying A equals to C, these are the properties of a correction. So correction mostly, they move in the proportionality of leg A, it's almost equal to leg supposed to equal to leg B, to leg C, man. So this is the leg A, and then you see also equal to leg C. That's how you take take profit of what? Of a correction. Hey, sorry guys, let me just switch off my Teams here. Oh, but now. Okay, so we have something like this. From that point to that point, that's your A, and then you've got your B, and then you've got your C. But remember, there are inside waves in each and every wave. What do I mean? So for you to get this leg C, you can still, so there's another A, B, C to come here, right? And then now you finally get your what? Your W, which is this one. Okay, that's your first leg, W. And then from there, it's correcting for what? For X. So normally in our X leg, we get triangle. When we say triangle, it doesn't mean it have to be a triangle. It corrects in a triangular pattern. That's what means a triangle. So which is what A, B, C, D, E, then it corrects. Okay, I hope you guys are not lost. I hope you're still following me. So I would prefer everyone to understand, or maybe first of all, if you're a dollar trader, understand the movement of dollar index first before you what? Before you engage. Because mostly okay. Unfortunately, promise I got some eye problem, so white is gonna affect me. But what I'll do is, don't worry, we'll upload this video on our YouTube, then you can just follow up. So this is where we are now. So when I talk about this part, this correction, this now what we are concerned about right now, this part. So before we expected that they will close the gap and come down, right? And then they didn't do that. So the other thing that we need to note, if you want to draw proper trend line, please make sure that you use the line graph. The line graph is the one that can give you proper trend line. So we've got this one, selecting that one, this point and this point is correct, and then the rest can be one. So then the rest is something like this. So what are we saying? Now we have a new area interest. This is what we're interested in. Yeah. So we're interested in the market. Okay. And then we go back to your candlesticks. There we go. So what are we saying? We are saying that okay, this market it gave us leg A, right? Then after giving us leg A, give us leg B. Then after leg B, give us leg C, leg D. Then now we're constructing what? Leg E. So to give you your A, B, C, D, E. So our E are expecting the market to hit here. So what do I mean? I mean that we are still expecting this market to move one more push up. So one more push up, and then we'll come down. So expecting the market to hit this area. That's your target. So this is our target. Sorry, I'm looking for that guy. Where is he? Yeah, this one. So we're expecting this. And then this is the update. But with this, it doesn't mean when price gets there, you have to quickly sell. No, you wait for engulfing candlestick. This is an engulf. Check. Try to spike by the second candle engulf more than 50%. Then where's your stop loss above there? Then you sell. Understand? So you have to look for such things. So we are saying that we might observe a push up, okay, and then come down. Or it might be a last spike and then come down. Or else, if you don't get this entry, you wait. What do you mean by that? You wait for the market to break below this channel. When they break below this channel, then you can get what? Another entry. So this is your second entry. This can be your first entry. So if you miss on your first entry, wait for the second entry. Okay, that's on dollar index right now. So I want to show you the relationship between gold and USD. Like I said, there's a relationship. So you must understand if you're a gold trader, you have to know how USD ZAR moves. You have to know how USD JPY moves, and also you have to understand how to trade OZ, which is ODUSD. So what is the relationship? Remember, there's a relationship, a trade relationship between mostly China. So when you say China, we are talking about the Asian countries, the Asian continent as a whole. There's a relationship between China and Australia. There's a very strong trade relationship. So this means also when yen is going up, when yen is getting stronger, it also means that the old USD is gaining. So sometimes we may not understand like why is the old USD going up, why other pairs they're not moving. It's because of the trade relationship. If there is greater or positive news regarding yen, it also pushes oils. So these are the things that you need to understand. So I'm just going to quickly show you. Now we're going to gold. So right. Okay. Unfortunately, it removed. And what did it do? Go back. No, it's okay. As you can see, currently, gold is what? It's going up, right? Okay. And let's go to use this. And I think I also posted something about this. Yeah, I did. There is. If you remember last week, I said to you, yeah, at this point, I posted the from. Let's take it from daily. So this is the channel on our USD. USD is it's moving in a channel, and also it's a corrective channel. It's like this. Understand? So it's in a channel. It's trending in a channel. So expecting WX W X Y X Z. So this is a double zigzag. Okay. So what are we expecting? Price to push up. Okay, what's happening here? Who's creating a group here? Okay, so let's go back to H4. Since we saw that gold is been going up, right? And check now. Yes, these are also just been going on, just been going down. So meaning to say, ZAR on its own, it's gaining. Understand? And the other thing that you need to know, remember market, this is a correction, right? It's not an impulsive way, it's a correction. So they move in a corrective way. So this can be our first leg, right? For A, then they'll come here for B. So what you need to do now, you just need to understand like, okay, where am I and what is really happening? So you draw your one, your Fibonacci from the, you take your Fibonacci 2 and draw from the highest point to the lowest point. Okay, so mostly when you expect corrections, they happen in the 61.8% zone, which is what we call the fib zone. So what am I trying to say? I'm saying that there is a potential that this market is going to move like this, come here, then after there, then they come after it like this. Then they'll come there. You see now, so this will be your first target, something like that, in this zone, okay? That will be your first target, which means there's an A, B, C to give you a bigger A, and then they correct again, then they come again for the last move to hit this area. So you just need to know stages. So currently, we are saying that we are still expecting this market to push a little bit higher. So they might go back here in this zone. This is the 61.8% zone. So that's why I see they're pushing up. Then from there, you start looking for what? For sales zone. In doing that, remember, also on the dollar index, we observed or we saw that, okay, there is also still a potential of it pushing up. Understand? Any questions so far so good? Any questions? Okay, last question. When you talk about the analysis of gold, okay, fine. People don't want us to focus more on gold. Okay. Then let's go to gold. Let me save this. I don't know why is it not saving my previous chart, so I have to restart the trading view again for me to get my previous chart. Okay. Here's the gold. Let's see if people are interested in gold. So now with gold, let's actually start from weekly. So normal, as you can see that our gold, it came all the way after wave 2, and then they constructed 3. Then you have 3 ABC to give you A, B, C to give you B, 1, 2, 3, 4, 5 to give you C. So which is your W, X, Y. Now this is how these corrections are formed. So I'm now showing you in a deeper vision of Elliott waves. So this is how everything is done. So you see when I say ABC gives you a bigger A, this is what I mean. And then that bigger A gives you a W leg. Then ABC is a this is a flat 335. So this is a 5 movement. It gives you what? A B leg. 1, 2, 3, 4, 5. It gives you a C leg. Understand? So in this case, we observe that the whole structure of this one, it was a 3, 3, 5 correction. Anyway, these things I will usually teach them in a deeper visit. But anyway, after that, then we corrected our ABC to give you what? Your D leg, which is also now became your X leg in another way around. So I've got two. Why someone might ask like, why do you have like two projections? The zigzag and the triangular correction. Understand? Someone might ask that. So the reason why is that, okay. Sorry guys, I just need to take that call. Anyway, so as you were saying, so now someone might ask, why do we have two structures? Like the ABC correction, ABCDE correction, and the WXY correction. Remember those two things, they are different. They are really different. But at the moment, the structure is playing in a two-way structure, in a two-way formation. Do you understand? So this is a waveform correction. So if you understand the principles of waveform, Now you understand what I'm saying, because the reason why I'm saying there is a high potential that gold is going to fall. There's the high potential that gold is going to fall. Why? Because we don't have any impulse here. So a correction, the minimum, it can be A, B, C. And then the next leg must be an impulsive leg. But if the next leg is a corrective leg, and then there is no potential of it being on an impulsive leg, meaning to say we are still in a corrective wave. I hope you understand this. So in the near future, we're going to see that gold is going to fall because it has to come back more back here. Those who have been following me from 2017, I think we did an analysis in 2018. I did an analysis about this gold, somewhere there, and then it did exactly this pattern. You can check those videos on my YouTube. Anyway, so let's go to daily. Now on daily, this is what I was saying on daily. So we observed there was a breakout of this structure, right? There was a breakout here and a retest. So the market broke out. This 1, 2, 3, 4 corrective, and then last leg 5, and then corrected again. Okay, and then there's a inner correction here. So now you need to pay more attention. So in doing that, remember now, this became our leg D, right? So we are now constructing our leg E. So in that, we have got A, and then this become our B. But in this becoming our B, so it's an ongoing correction. As you can see, the market came here and hit here. Understand? And it hit here, okay? By doing that, and then what did they do? They went back up again. So there are two scenarios that can happen from here. I'm going to explain this one. So as I said to you, corrections, they move in ABC. So the first scenario, it can be this one. Who's that thing? Who's that guy, man? Huh? The first scenario, it can be this, A, and then B, and then we expect another, what? A C. Sorry. And then we expect a C. This can be the first scenario, right? And then the second scenario, it can be, we are now dealing, let me actually do this so that won't confuse a lot of lines. We are now dealing with this. This is now the ranging box that we have. So what can happen here, the possibility that of this is that the market can come up here. Okay, so what does it mean? It means that we might observe this correction, A, and then that's your B, and then from there, they should pick up there again. So in doing that now, remember this is our W, so we have A, B, then that will be our C leg. Then from there, you expect these guys to move down. This is what is possible. This is another possibility. Okay. So, but with this possibility for you, is as a trader, you need to understand the levels on which you are. So I'll go down to H4. Okay, so as we go on H4, what we can see here, there is a channel also which was formed by the market, right? Okay. So in this channel, if you check from that point to that point, of which that one now, it becomes your minor zone. This becomes your minor zone. Because remember, from the bigger time frame, you saw the key zone, which is up there. This becomes your minor zone, meaning it can become your first target. So the market came in the 71.8%. So there's a lot of reason why this you might buy or why it went in a buy. So if you were to buy, you were supposed to buy after this engulfer. So number one, there was an engulfer here. The market engulfed, okay? And then number two, there is a divergence here. there is what does divergence here? So what does divergence mean? Divergence mean it's the opposite. When the two, well, let's say when two moves in a parallel, and then the other one decides to go the other way around, that's what we call diverging. So as you know that the line graph is relative. Okay, as you know, the RSI is a relative strength index, meaning to say it's relative to what? To the price, to the market price. So check here, what was happening? As the market was going up, it was also going up. This correction is that one, and then this one is this one, going down, everything. But check now the difference now, it's here. From here, I'm left with 6 minutes. So from here and to there, I want you to notice a difference there. Can you see that there is a large thing? Because here, now, it's slightly going up, but here it was coming down. So that's where the divergence part came in. So you noticed a divergence. That was a signal. So that was a signal, and then the reason to buy. So currently, if I want to trade this one, I will be looking more into buying, but this is not a signal. If you, this is just an analysis. I'm just showing you how I analyze the market. So and then from there, you have your new trend, which also was broken. So this is how you get your entry. Remember, like I said, your first entry is this one, your first commission, and then your second entry, it has to be confirmed here, but it's not yet in confirmation because you have also a support and the resistance of what? Of these moving averages. So yeah, if I'm to trade this, I'll look more into a slightly bullish movement for the time being, then I'll sell later. My target will be there, and then I was looking for sell. I hope I've answered your question. Okay. I think for today I did a lot. So the key things that we spoke about is to identify correlative pairs and don't trade everything. Be a person who specializes in a few pairs, maximum of 5 is okay. Specialize on them, understand their movement, understand their economic events, understand everything that is happening around them. Then from there, that's it. From there, you will find out like, thank you. From there, you find out like you become a better trader. But if today was this one is trading Eurocard, you are diving to Eurocard. That one is trading that, and then you dive to that. You never have any understanding for anything. You never have any understanding for anything. You'll be like a girl in a club, want every guy. So you just need to specialize on few pairs and then follow their pattern, practice more, check more, win. So I give you a tip. I see it when we are buying gold, we sell USD ZAR, we sell USDN, remember, and also, yes, we sell, and also we buy USD or when we're buying gold. The opposite is true. So just go back to your chart and revise those days. And please let me know on WhatsApp what you think, or you can comment on the YouTube because I'm going to upload this video on YouTube. But either way, any questions, you can text me right now and then I'll respond to them. I'm left with 1 minute. Other than that, you can text me on WhatsApp. I'm available. Okay. Anyway, thank you very much. Those are good questions. Please text me on WhatsApp or you can text me wherever you are. Next bit, I placed it straight on gold. Entry was that. I've been holding for 3 days now. I placed a sell. Okay, so entry was 1400. And so guys, get me well and please understand this, man. I am not here to give signals. And I'm not even allowed to do that. So your sale was here. I don't know what was the reason for selling, but I think I explained my understanding of this pair. I'm not saying you're wrong. It depends on the trading strategy. But one thing that I can just tell you is to let the trend to be your friend. And how can you do that? You can do that by understanding mostly the index. Which one is the index? The dollar index. So if you can try and understand the dollar index, then you will get an idea of how other pairs they might move. That's all I can say. That's all I can say for the time being. Yeah. Any questions? Okay. All right. Thank you very much, guys. Have a lovely weekend ahead. Bye, everyone. Take care.